This video graphic examines the wage changes of employees in the private sector in 2012. The findings are from the survey on annual wage changes, which covered some 4,694 private establishments with at least 10 employees, achieving a response rate of 90%. The tight labour market continued to raise workers' wages, but the pace of increase moderated in 2012 amid the weaker economic conditions. Total wages, including employer CPF contributions in the private sector, rose by 4.2% in 2012. This was lower than a growth of 6.1% in 2011, reflecting the slower economic growth in 2012. Excluding employer CPF contributions, total wages, comprising basic wages and bonuses of private sector employees, rose by 3.8% in 2012 after increasing by 5.3% in 2011. The total wage rise in 2012 stemmed from a 4.5% increase in basic wages, which more than offset the decline in bonuses from 2.32 months of basic wages in 2011 to 2.19 months in 2012. After adjusting for inflation using Consumer Price Index for all items, real total wages, including employer CPF contributions, declined by 0.4% in 2012. However, it increased by 0.5% when adjusted using CPI less imputed rentals on owner-occupied accommodation, which relates more directly to the actual cash expenditures of households. Amid slower GDP growth and continued high employment creation, labour productivity contracted by 2.6% in 2012 after rising by 1.3% in 2011 and 11% in 2010, reflecting the volatility in year-to-year change in labour productivity. Over the long term, real wage increases have been supported by productivity growth. Labour productivity grew on average by 1.6% per annum, exceeding the growth in real total wages, including employer CPF contributions of 1.2% per annum over the decade from 2002 to 2012. Despite the more subdued economic conditions, the proportion of private establishments that raised total wages of their employees was largely unchanged at 68% in 2012. However, the average quantum of wage increase in these establishments at 5.8% was lower than 6.6% in 2011. The proportion that froze total wages was 24%, broadly unchanged from a year ago. 9.0% of establishments cut wages, broadly comparable to 2011, with the quantum of wage cuts at 4.4% and 4.3% respectively. Although economic conditions weakened in 2012, slightly over 8 in 10 or 82% of private establishments were profitable, unchanged from a year ago. Wage changes were correlated with profitability as many firms have restructured their wage system to tie wages more closely with business performance. The more profitable Category A establishments gave the largest total wage increase of 5.3%, followed by Category B establishments at 4.4% and Category C at 2.9%. Even the loss-making Category D establishments gave a wage increase of 2.6%. The profitable Category A and Category B establishments gave out about the same quantum of bonus, also known as annual variable component, in 2012. Category C establishments paid out a lower quantum of bonus, while the loss-making Category D establishments gave the least. In summary, the tight labour market continued to raise workers' wages, but the pace of increase moderated in 2012 amid weaker economic conditions. After adjusting for inflation using Consumer Price Index (CPI) for all items, real wages dipped in 2012 but increased slightly when adjusted using CPI less imputed rentals on owner-occupied accommodation. Over the long term, real wage increases have been supported by productivity growth. With that, we have come to the end of the video graphic. For more information, please refer to the Report on Wage Practices 2012 available at the following web address.